Hey everyone, this is Kirk here again from OptionAlpha.com, where we show you how to make smarter trades. And in today's video, I want to talk about the smart use of leverage when it comes to trading options. And the whole idea here is that we just want to be conservative with our use of capital, because options are very, very powerful, but they can also cause us to make really bad decisions if we're not smart about how we use and allocate our capital. So as we know, options trading offers us the unique ability to leverage our capital, and probably one of the most easiest ways to leverage capital in the markets. And rather than buying, let's say, 100 shares of a stock for $50, which will cost $5,000 up front, we could buy a simple option for $500 and control or gain access or leverage to 100 shares of that same stock. So we use $500 versus $5,000. Just to kind of drive home the point here, this is a look at Citigroup. And so Citigroup right now is trading at about $50, about 50 and a half right now is where Citigroup is trading. And we could go in here and we could actually buy the underlying shares, buy 100 shares of this stock, and that would cost us a little over $5,000, so about $5,053 to buy the actual stock. Or what we could do instead is we could go out to the March options, which are about 66 days away, and we could buy a deep in the money call option at a 47 strike, which we'll get to later on, just kind of breaking down all these different things. But we could buy that option for about $510. So you can see that we use a lot less capital and we still have about the same type of profit potential in this trade. Not to say that this is any better or worse of a trade that we like to make, because we don't do single long options, but it just proves the point of how you can use and leverage options in your account, and again, how you can control a lot more shares of stock with less money. Now, the downside of using leverage is obviously that you can increase the amount of risk that you have exponentially in your account, because just as much as we can increase our return exponentially on every dollar that we invest, that also works in the other direction. So I wanted to present this table to you that shows how much you would actually need to create or generate in return to recover from losses if you over leverage your account. And what we suggest here at Option Alpha is a sliding scale approach to allocation between 1% and 5% of your account per trade. And again, that is going to be different based on your account size. So you can go ahead and look at all of the trading guides and allocation guides that we have inside the membership area. But this just gives you a frame of reference as to how over allocating on any single trade or any single set of trades can really be detrimental to your account. So as you can see here, we start with a $10,000 balance. If you were to lose 25% of your account, which leaves you with about $7,500, which is not, and honestly, not something that we is not uncommon. We see this a lot with new traders who start, is that they come to us and they say, hey, I had $10,000, I lost, about $2,500, because look, you can get into a couple trades that are, a couple $100 and lose your shirt on those. And it's very easy to lose $2,500 in this business trading the wrong way. But what's important here is that you don't just make $25 to get back to par. Now you're starting with $7,500. So in order to get back to that $10,000 account balance that you started with, just to recover from where you were, you actually need to generate 33% on your new balance. Okay, so as soon as you lose 25%, you actually have to generate 33% on your new balance to get back to square one. This is also why I hate other newsletters that are out there that have a 25% losing month, and then they come around and they say they have a 30% winning month, and now they're up 5% on the year, right? And they do this kind of calculation, but it's not a simple addition. You don't just lose 25%, make 25%, you're back to square one. It just doesn't work like that, and a lot of people out there are obviously presenting false information. The same thing works as we kind of work down this list. You see $10,000. If you lose half of your account, you got to make it up by almost 100%. So you got to have 100% return on your investment to just get back to par. And then the most alarming one is $10,000 allocating and losing 90%. You're left with $1,000. You've got to make up 9,000% of your new balance just to get back to where you were to begin with. And again, this is not uncommon. I see this all the time when I start coaching people, is that they come to me and they say, I started with some amount and I lost. And, it seems like I can never get my footing back. And that's because you allocated too much to begin with, right? You should never have losses that are 50, 75, 90% of your account balance at all. If you're trading small and trading smart, as we'll show you in the other video tutorials and kind of courses that we have here at Option Alpha. There's no way that you can blow up your account if you're doing it the right way. Impossible to blow up your account if you're doing things the right way and trading small and on the right side of volatility. So as you get started with options trading, understand that options can be very powerful in generating high returns, but you need to be smart about how you do it. Now, I encourage everyone to go to optionalpha.com, sign up for our membership, because you can download our position sizing PDF, which goes through all of the different position sizes that you should have based on different percentages and on your account size. So it kind of optimizes the best of both worlds. It's a very quick PDF that you can use and kind of post in your desk, and gives you great access to position sizing so you don't have to think about it when you're entering a trade. As always, if you guys have any questions or comments, please add them right below in the video lesson page, and happy trading.